This video is for educational purposes only and should not be considered financial advice. The magic of trading the Anchored VWAP with ICT Concepts. In this video, we will show you how to use the Anchored VWAP with ICT Concepts to help predict price movement and develop a daily bias as well as a session bias. The VWAP stands for Volume Weighted Average Price, and it measures the average price of an asset over a period of time, coupled with the average volume. Simply put, it is like a moving average that factors in volume. Therefore, it is consistent across time frames. When you use the VWAP, you normally choose the data for the current day. You can also select other time periods, such as the week, month, or quarter. This, however, presents a problem because a lot of the time price is in consolidation, and this data does not give you good points of reference for price movement. The solution to this is the Anchored VWAP. The Anchored VWAP is the Anchored Volume Weighted Average Price. If you anchor price on the beginning of an impulse leg, you can more accurately predict price movement. This will give you the opportunity to enter or exit a trend more precisely. The basic strategy is to use the Anchored VWAP center line as a place to trade from and the standard deviations as a place to trade to. As you can imagine, this would be a great tool for people using ICT concepts to trade with. You can figure out your daily bias as well as your trading session bias. You can also plot the expected move using the AVWAP by using the standard deviations. Let's look at some examples on the charts. Downtrend of E Mini Futures. In this example, we see that price broke structure and then had a retracement. This is the Anchored VWAP center line, the blue line. The goal is to sell above this center line because we are now in a downtrend. Price retraces back to a standard deviation above the center line and then crosses below and goes all the way to 2 standard deviations beyond the centered line. If you missed this trade, although this is a 4-hour chart, so you could have seen some type of entry model on the lower time frames, price retraces back to the center line and a trade could have been taken here, off of here, and definitely here when price wicked to the upside but closed below the center line. This is an uptrend of the E Mini Futures. We place the Anchored VWAP at the beginning of the trend, and that gives us our standard deviations plus our center line. This is the impulse leg and then the retracement. You can also place a second Anchored VWAP at the retracement level. This will give you 2 Anchored VWAP lines to trade from. And as we see here, price respects this second AVWAP line. This is an entry here off of the rejection from this second AVWAP line. Convergence of trends on the E Mini Futures. The previous AVWAP has extended all the way out to here, and this was our original downtrend example that we had shown. Once price broke structure, it dipped inside of the previous uptrend's Anchored VWAP. And as we see, that large down move on this 4-hour chart coincides with the retracement AVWAP that we had placed and the original AVWAP that we had placed. And once price moved outside of that, that could have been an entry. And of course, you're looking for it to terminate at this center line. And as we can see moving forward, price consolidates inside of these center lines from the previous trend and now the current downtrend. Here is how to form a daily bias using the AVWAP. In this NASDAQ 100 example, we see price broke structure off of an impulse. We could have placed our AVWAP here, but since this is the retracement, we'll just put it here as this is the leg that broke structure. Price continued along the track of the first standard deviation and then closed below the center line. Price then closes back above that center line. If you're using this as a daily bias, you're looking for price to move to the upside because price closed below the center line and did not continue. Once it closed above the center line, you're looking for price to continue higher. And since we've already reached the first standard deviation, we're looking for the second standard deviation. And as so happens, price does reach back down to touch the center line, but then continues higher. So your daily bias to the upside is confirmed. As we continue, price does reach that second standard deviation. And this is a daily chart. So if you would have entered off of this center line, there are a lot of pips available to that second standard deviation. Our bias now has to either be neutral or to the downside because we have reached our target, the second standard deviation. And as we see in the next chart, price does move to the downside. And as we will talk about in a minute, price hits this center line from the retracement, and there's a wick, and it closes above it. This is a clue that price will be heading up on the next day. And as we see, price does exactly that. Here is an AVWAP strategy that you can employ to help refine your ICT trading. On the daily chart, plot the AVWAP on the most recent impulse. If there is a retracement, plot that too. Form your bias based on where price is inside of the standard deviations. Go to the 4-hour chart and wait for price to retrace to the closest center line. Once price touches it, go to the 15-minute chart and look for an ICT entry model. Target the next standard deviation level as your take profit. Here are a couple notes. Whenever price closes beyond the center line, wait for price to close back beyond it in the opposite direction before entering. Also, whenever price wicks the center line, you can trade the next candle in the direction of the trend. Here's the AVWAP strategy. On the daily chart, we've placed our AVWAP on a retracement, and price moves to the upside, and we're looking for an entry. On the 4-hour chart, we see that large impulse leg, then a retracement, and you could draw an AVWAP from any one of these retracements on a 4-hour chart to give you more direction. But as we see this second retracement, we drew an AVWAP, and now we see that price has retraced to this second AVWAP line. Now, once price touches the center line, you want to look for an entry model on a smaller time frame. Here is that smaller time frame on the 15-minute. Once price touches the AVWAP line, we see a break of structure, but we don't see an entry model. You could use optimal trade entry, but it's not as clear. So price actually goes down and touches that AVWAP line again. Then we see a break of structure and a fair value gap. And there's actually 2 fair value gaps. So once price closes into this original fair value gap and then wicks out of it, that is an entry. So you enter here, and your target is this second standard deviation above the center line. Price moves past this first standard deviation and then continues higher. You definitely want to take some profits, but still be confident that you're going to reach the second standard deviation. And as we see again on the 4-hour chart, price does reach that second standard deviation and actually goes a lot further. To recap, the AVWAP is a perfect tool to combine with ICT because it gives you an overall bias on the daily chart, as well as the time frame you are trading on. It can also give you an idea of where price can go in your trading session. Thanks to viewer @MoAtlas for suggesting this video idea. If you found this video helpful, please like and subscribe for more videos like these. Also, please leave a comment if you have any suggestions or questions. Thank you for watching.